Hello again, fellow BeachBum traders. Thank you for joining us for part 2 of our weekly trading game plan for this week, for the trading week of November 14th through November 18th. And in part 2, we'll talk about the stocks we're going to put on our top swing trading stocks to watch list, in our bullpen, in our shopping list, etc., based on our market analysis, trade ideas, and strategies from part 1 from yesterday. So we'll go ahead and get started, and we'll talk about the top swing trading stocks to watch for the trading week of November 14th through November 18th. So here's our Google document with our notes for our weekly trading game plan part 2 for this week. This is a publicly accessible Google document. You should be able to find the link to this Google document in the description box below, so you can reference any additional videos we reference, tools, our notes, etc. And this is also in a public Google Drive folder with many of the Google documents from our previous game plan. So you can always reference back to those as well. Again, the link should be in the description box below, and it's publicly accessible, so you can access those. Good morning and welcome, Spacula, Flip of the Shippa, Nugam, the Ricky Khan. Thank you all for joining us in the live chat for this live stream. Glad to see you all. Hope you're all doing well today. If you have not already seen part 1 of our weekly trading game plan, titled Is the Bear Market in Hibernation, we would highly recommend that you view that. Again, that has our market analysis, our strategies, trade ideas, etc. from last week. So and that it provides all the input data as to which stocks we're going to put on our watch list for this week and why. So again, we'd highly recommend you view that one. And we talk about that, in our humble opinion, we think the bear market may hibernate through the end of the year unless somebody does something to poke the bear. So we talked about some of the things that might poke the bear and stir it out of hibernation. But otherwise, I think the bear market's going to hibernate through the end of the year. And so we're going to take those opportunities. We also talked about a potential correction retracement in the next coming days, so we also want to be prepared for that. And again, we talk about all that in more detail in part 1. So I want to talk about some of our trades from last week. I'll quickly go through them, and then we'll look at them in the charts so you can see where we entered, where we exited, and we can talk a little bit about why. The first one is Disney. We went long Disney on the 9th at 89.01 on its nosedive after earnings. They were disappointed. Their cost of their streaming business disappointed people, and it took a real dip right at earnings. I wasn't able to catch the dip right at earnings. I wasn't at my computer at that time. So I put it on the watch list, and then the next day or so, when it dipped back down, we went long Disney. We do have an older due diligence video that we did on Disney, and we did this for the beginner trading channel, and you can view that via the link that's in the notes here and hear more about. I have history working with Disney and kind of my views as the future of Disney. So we'll look at the charts there in a minute as well. DRIP. We've had a long position in DRIP. DRIP is the short on oil, oil exploration companies. We've had this for a long time, and I've been selling covered calls against that position, generating our own dividends against that position. I sold another one for March 23 at the $40 strike price, and generated another dividend. If DRIP dips back down, I'll buy it back and keep the difference in premium as a self-generated dividend. Again, this is our strategy for particularly in the bear market when things are down. We'll just keep selling and buying back covered calls and generating our own dividends. So we'll look at that. I probably won't look at that one. And then we traded FANGU, which is the long on the FANG stocks, Meta, what used to be Facebook, Amazon, Netflix, Google, and I think they threw Apple in there. So it was FANG with a double A at one point. Now it's Meta. So we went long on the 9th at 37.63. We got stopped out on the 11th at 46.90 for a nice profit, ROI of 25% over 2 days, equates to a monthly ROI of 370%. So very, very nice profit on that trade. Congratulations to all our fellow BeachBum traders who also profited on that scalp swing trade in FANGU. Again, we'll watch FANGU. If it happens to dip back down, hit a 52-week low again or close to it at a support level, we'll rinse and repeat, play this again. So that was a great trade, nice profit. And then also on TMF, we sold some covered calls at the January 25. $15 strike price. Again, this is one that we're repeatedly selling covered calls, buying them back. So TMF, TLT, the treasuries ran up a bit end of the week. And if they retrace and it goes down, we'll buy them back and keep the premium in terms of a nice self-generated dividend and rinse and repeat. These are all, rinse and repeat, keep generating money. UROI, we got into that on the 2nd at 211. We got stopped out on the 9th at 258. Again, nice profit, 22% ROI, equates to a 30-day ROI of 95%. So congratulations also to our fellow BeachBum traders who made a profit on this scalp swing trade in UROI. Same thing, if they push uranium back down, we saw they ran uranium up. If they push it back down, we'll take a look at UROI and some of our other uranium plays that we like to watch. So welcome also Ollie in the Bay. Good to see you. Born to be free. Walter Lyons, glad to see you all in the live chat. Hope you're all doing well. So just a quick reminder, if you'd like to get real-time alerts when we make trades, get stopped out of trades, etc., we send out notifications as quickly as possible through Patreon. So if you're a member of our Patreon, we send those notifications out as soon as possible, and you would receive those via email. And then they also get posted in alerts channels in our Discord. So our Patreon members have access to the alerts channels in our Discord. Also, there's automated alerts triggered from Thinkorswim that get posted to the Thinkorswim alerts channel, so you can see when that triggered for FANGU. Then when we actually execute a trade, I'll follow that up with a posting based on that Thinkorswim trade alert. And if we're doing it, not based on a Thinkorswim trade alert, then we'll post it just in the trade alert section. So you can see there's where we sold the covered calls. There's where we went long, FANGU, etc. So if you'd like to get those types of trade alerts, you can join our Patreon, help support the channel in general. It's all voluntary. Again, I don't ever recommend blindly following anyone's trades. Everyone has their own style, personality, situation, etc. But if you find that helpful to see what we are trading and when, you can get our trade alerts via our Patreon. So now I'm going to jump over to Webull. We'll take a quick look at those trades. I'll have to flip back and forth to remember when I got in and out of all these. So we'll start with Disney. So we went long 89.01. We're still in the Disney trade. So here's the Disney on the 9th. You see that dip. So we caught it on that dip. We went long. As you can see, I don't necessarily always get the very bottom price. I don't sell at the very top price necessarily. Our goal is just to make money. So you can see we got in there and it's since gone up. You can see I currently have a stop limit sitting at 91.62. As it crosses the subsequent support and resistance levels going up, I will move that stop up. I'm probably going to trail it by at least one level. I don't want to get prematurely stopped out. And if you look at the ATR, the average true range for Disney, it's about $4. So I don't want to get too much inside of the ATR because I don't want to get stopped out of Disney as long as it's continuing to run up. So, and again, you saw that big dip on their earnings and then it bounced back up relatively quickly. So Here's our trade on FANGU. So we went long 11.9 at 37.63 and got out at 11.11. So I got to zoom in some because of the split. So 11.9, you can see on that, again, on that dip. I may have even done this pre-market, set that up. I set the order up. It may have triggered pre-market, and then you see FANGU made that nice run up. When it rolled over, it looks like they were stop hunting on the 11th as soon as the market opened. It was kind of declining pre-market, so unfortunately, stops don't get triggered pre-market in extended hours. But as soon as they dipped it, I got stopped out. You can see it did bounce back up, which is fine. I made a nice profit. And again, if it comes back down here, we'll play that again. So. And then UROI. So UROI, we went in on the 2nd, got out on the 9th, went in at 211. So let's zoom that guy out. So you can see on that dip is where it triggered our order. I had an order sitting there. So again, our BeachBum strategy, a lot of times, and I'm doing more and more of this, is I'm just putting orders at the prices that we like, we'd be happy with. It may not be the ultimate bottom price, but if the risk reward profile is there, we'll put the order in there. If it dips and hits it, great. And then you see it ran up, and then you see it rolled over. We got stopped out for a nice profit. So again, nice profit on UROI. And again, congratulations to all our fellow BeachBum traders who also made a nice profit on those trades. So quick lesson learned, and I also posted this in this new channel. This is a public channel in our Discord on lessons learned, so you can share your lessons learned in trading and also benefit from everyone else's experience. And I'll put the banner up for our Discord invite, and our Discord is free to join, and we would love to have everyone join and participate in the discussions, actively participate in our Discord. Again, it's free to join. You can find the invite in the description box below, and join in our community, join in the discussions, learn from your fellow traders, help your fellow traders succeed in their trading career. That's what we're all about. That's what we're here for. So in this lessons learned channel, again, you can share anything you learn, benefit from other people's lessons learned. And one of the things I found out this week was dealing with a lot of the trying to sell covered calls and then trying to buy them back is apparently Webull doesn't show data from all the exchanges. Now, maybe if you pay for additional feeds, you might be able to get more of the data, but I noticed that the prices that I was getting from E-Trade, I have an automated interface to E-Trade, and that it was telling me it had a price that was different than what was showing in Webull. So I went over and checked in Thinkorswim, and I found out, okay, there's some discrepancy between the data that Webull's showing and some of the other platforms. So just again, a lesson learned. It probably behoove you to check options prices in other platforms, and not necessarily rely only on Webull. Again, I'm not paying for feeds for options right now. I may have to look into that, but I'm checking them now in Thinkorswim if I want to make an adjustment and I'm getting data that's inconsistent. So I hope that helps all of you as well. So let me grab a quick drink, check the chat, and then we'll talk about our updates to our watch list, our main real-time watch list for this week. Okay, So just a quick reminder, I'll show you the watch list in Webull in a second. As you can see, Webull's currently still offering their 12 free stocks. As you can see, we use Webull primarily for our primary trading platform. We do most of our trading with Webull. We also use it for our market analysis, as you saw in part one. We also use it for a lot of our due diligence. And again, you can still get 12 free stocks just by opening and funding an account with as little as a penny. You get 2 free stocks, each up to $300. When you open your account, an additional up to 10 free stocks, each valued up to $3,000 just by depositing any amount, even a penny. And you can get your 12 free stocks. Again, we like a lot of the features of Webull, particularly the trading hours, which are 4 a.m. to 8 p.m. And again, we find opportunities at that 4 a.m. window before a lot of the other traders can even trade. We can take advantage of those opportunities. And so you can still get 12 free stocks. If you're not already using Webull, you might as well open your account, fund it with $1, get your 12 free stocks. If you don't like it, you can cash it out and go, to your preferred platform. Why not? And you can find our link. Here's our link here. It's in the description box below, etc. So we took AGQ off of our watch list. We saw yesterday, gold, silver, all the dollar-denominated commodities ran way up when the CPI number was a little light. The dollar took a dump. All the dollar-denominated commodities ran up. So, we're not going to chase silver at this point. It's in our ETFs Google sheet, as you'll see later, and we can always see if it comes back down and the risk reward looks more attractive. Same thing with oil. Natural gas has run up again. So again, it's not really a good time to go long natural gas for any kind of swing trade. Now, day trading, breakout, momentum, it's all different. You're looking at a daily move. If you see it move, there are opportunities there. But for swing trades, we're going to take it off our top stocks from our swing trading watch list. We're taking Disney off. You can see we added Disney on the 8th after the plummet on earnings. Then we went long Disney on the 9th. Now, just a quick reminder is when we make these intra-week or even intra-day changes to our watch list, our Patreons have access to a web page that gets auto-generated at the end of each day. So any intra-week changes, they will automatically have access to that. Also, if I make any changes during the day, we have a channel in our Discord that our Patreons have access to, and I'll post any changes to our watch list there if I make it intraday before the end of the day. So you can see on the 8th, I posted that we were adding Disney and taking Soxel off. So again, if you would like those, intra-week, intraday updates to our watch list, our Patreon members have access to that. So again, you see we added Disney on the 8th, and then we went long. This week, we're going to add FAZ, which is the bear 3x leveraged on the financial industry. As you'll see when we get to our ETF spreadsheet, they run the financials up, and it's approaching a top. And so we think there may be an opportunity on a correction, a retracement in financials. Taking FANGU off. Again, it's already run up. We made our profit for now in FANGU. Mark Forge we've had on our watch list a little bit. It was in the bullpen, I believe. We added it to the watch list on the 9th after it plummeted on an earnings miss. I probably should do a due diligence video. I'd like to know more about particularly the health of the company, their financials, but they do show a profit in the past. So it looks like they're a 3D printer type of company. So going to keep an eye on them, might go long on them. Pets, again, they had a earnings miss, so we added that to the watch list on the 8th, posted that in the Discord. It's optionable. They pay a dividend. The next dividend date's the 17th. So it'll probably dip on the 17th on that ex-dividend date. And you can also see our previous due diligence video on pets. We've swung pets profitably several times in the past, and the fact that they're profitable in general is positive. So the opportunity may be at that ex-dividend date. It'll probably dip about 30 cents, and that may be the time to get in. And then it's a quarterly dividend, and it's not huge, but we're buying it more for the swing than for the dividend. OPP we've had on our watch list for a while. It's run up a little bit. This is that fixed income bond ETF. When bonds started to run up, this guy ran up a little bit. If we can catch it on a dip, it pays a nice monthly dividend, 20% yield. So I'd like to get a big chunk of this guy on a dip. Looks like the next ex-dividend date's on the 13th, probably. So that may be the opportunity if it takes a dip on the ex-dividend date. You can see it's got about a 15-cent dividend. Taking SOXL off, and we're putting SOXS on the watch list. SOXL is long on semiconductors. SOXS is short on semiconductors. Again, when they pushed, they made this exuberant run in tech, they pushed all the semiconductors up, even though we've been talking for weeks that the forward guidance is poor in the semiconductors. There's a surplus now, and there's restrictions on selling semiconductors to China. So there's a lot of negative news out there, but regardless, they've run semiconductors up. So I think there's an opportunity to short semiconductors when it peaks out, when this exuberance in the tech run abates a little bit. I think this may be a really nice opportunity here. It'll be short term, but nice opportunity. Seagate we've had on the watch list in the bullpen a couple times. It's been a little choppy, had run up a little bit. Looks like it came back down. So we did recently do due diligence on Seagate, which you can see as a bonus via the link in this Google document. It's currently unlisted, but again, you can access that due diligence, see why we would be at least willing to take a shot at Seagate. Taking TQQQ, which is the long on the NASDAQ. Again, they've run the NASDAQ up. We'll see. I looked at the SQQQ, which is the short on the NASDAQ, but it's not at a support level, a 52-week low where I would go for it. And we're also going to take VTI off the watch list. There's just no reason to watch it. It's already run up. But I still do have these big orders sitting at the 52-week low. I'll just let them sit there. If they ever, dip the total market unexpectedly, I do have those orders sitting there. So I can always cancel them if I need that cash for anything, but I don't right now. So now we'll whip through that watch list in Webull. You guys are having a good discussion in the chat. Glad to see that. So that's good. I love to see fellow BeachBum traders helping each other out. So again, Webull's nice. You can have all kinds of different watch lists. So I just flip over to my real-time watch list. Here's what's left on our watch list going into next week. Again, I expect this to be pretty dynamic, pretty fluid, and I revisit this, at least at the end of day. If not, if something happens during the day, I'll make changes as well. But so here's the short on the financial industry. This is that ETF to short financials, and you can see it's approaching a previous low. So here's that support level way back there. You see it's approaching that. You see the risk reward is very nice. So if they max out the financials, I think there's an opportunity just for at least a correction, etc. So here's mark forward. So you can kind of see where the low is. It's made recent new lows. So I've got it on that little dip. You see it bounced up on Friday. So again, a nice low. If we can catch it on a dip, you see it's got, pretty decent risk reward, could go up to the 3s. So here's OPP again. We see, I missed it there, and it's run up some. We'll see if we get a correction. If it keeps running away, I'll let it go and we'll take it off. But I'd like that 20% yield monthly dividend. And again, it may be, we talked yesterday about the Fed interest rate hikes, and it may be at the point when they raise in December, whether it be 0.5 or 0.75, that may be the opportunity to get into OPP again. And then going forward, again, we expect interest rates to keep going up, but they'll probably go up slower into next year. So here's pets. So you can see previously it was down in this 19 area. It got close recently, ran up, and then dipped down on earnings because the earnings disappointed. So if we can get a shot at that, at a dip, that would be nice. So here's SOX S. Again, the short on semiconductors. You can see how, they really ran semiconductors up last week, and it's approaching that 52-week low. So I think there's a really nice opportunity that, that's more than a double if it goes even just up to the point that it was back in October. So yes, Walter, that's why we like it. I think you posted in the Discord, didn't you, about the semi index? So Walter said it's, low relative to where it's been. Yes. And again, I think you posted something about the semi index. And again, do you know why they ran it up? Well, I think they ran it up with tech in general. And again, just we know that now they've got a surplus in some cases. PC sales are down. Spending on cloud's going to go down. They're restricted as to what they can sell in China. There's a lot of reasons that semiconductors should go back down. So I really like that SOX trade. We'll probably take that pretty quick as soon as they spike tech again, which, I don't know if they'll do it Monday, Tuesday, whatever. So here's Seagate. Again, it also ran up with all the tech stuff. We'd kind of like a dip. So if they take tech down for a short period of time, that's when we would get into Seagate. So now we'll talk about our bullpen stocks. The concept of a bullpen, if you're not familiar with our concept of a bullpen, these are ones that we're not watching real time. The main watch list, I have automation that runs against those and alerts me in real time of price changes, if they approach a buy price, if they're moving up, etc. And the bullpen ones are not on that automation, but I revisit them at the end of the day, see if their setup looks more attractive. If so, we'll put them in the game, move them up to our main watch list. If they run away or broke down, we'll take them out of the bullpen. So that's the concept. Alcoa, we took off on the 4th. I don't know if I mentioned that last week. I may have. We do have a due diligence video available. It's unlisted, so it's a bonus you can access via this link in the Google document. But it's run up. Aluminum had been beaten down when the price of aluminum was down, but now it's run up, so we're not going to chase it at this point. BDRY we've had in the bullpen. That's dry bulk shipping ETF. So we'll see that in the charts in Webull in a minute. DNN's uranium play, and we're going to take that out. It's run up. DRN, same way. It's on real estate, and it's already run up. Nail, though, looks like it may, if we could get a dip in real estate, home building. We know home building's in a recession, so if we can just get a little bit of a dip in nail. Again, we know home building and real estate, residential real estate's in recession, but eventually it'll recover. So this may be kind of a longer term swing on home builders and supplies, because we do know right now that industry's in recession. And then USOI, I think I may have mentioned last week, we took it off because oil's run up. Oil's sitting in the 80s right now, I think. Last I saw, I think it was 88, and it's almost 89 right now. So we'll wait for oil to come back down before we try to get into USOI. Again, that's a monthly dividend paying ETN on oil. So let me grab a drink. We'll look at these charts in Webull. I'll check the chat. Okay. Flippa says he likes snail. That's cool. Yeah, again, I think it's a longer term. Yeah, long-term trade, long-term swing. So BDRY, again, that's on dry bulk shipping. You see it was down 675 is where I like it. Ran up a little bit. It's come back down. So I just need to catch it when there's a dip. So again, here's nail. You see it was down in the low 18s, just below 19, and they ran it up to 40, and it's come back down. Just a short-term run up. So again, we need to get a dip. Right now it's a little high, but if we can catch it on one of these dips, and then swing it longer term, because it's still relatively low. It's been way up here a year ago. Okay, so let's talk about our ETFs on our ETF spreadsheet. Just a quick reminder, I'll go through this. If there's a particular category, industry sector, commodity that you want to look at, please throw it up in the chat. I'll try to focus on that. Again, our Patreon members have access to this 24/7. So if you want access to this, I do make changes regularly, and this gets automatically updated by some automation that we run at the end of day every day. So we revisit the support and resistance levels and bottoms and tops and automatically update this spreadsheet. The rest of it is like the low and the high, and the 52-week low and high are based on the Google Finance functions. But we're updating support and resistance bottom and top based on data in our database. So based on various price levels, support resistance levels. So again, if you have a topic you want to focus on, let me know. Otherwise, I'll spin through. I'm looking for, multiple greens. Says the risk reward profile is greater than 2, which is what I like to see. So I'm not interested in chasing ARC. Again, that's been run up. I did look at the short, but it's quite a bit above support. So I thought there'd be a better opportunity on shorting ARC, but it doesn't look like it. Aluminum, been kind of watching that. It's also run up a little bit from support. Yep, we'll look at the NASDAQ. We'll look at the FANGs. I also looked at biotechs. There's LabU, which is the long. LabD is the short, but it's a little bit above support too. Again, I was looking for any of the. We know they've run tech up, so anything that there might be a retracement opportunity. Now, I also looked at the Bitcoin stuff with everything going on with FTX. This is an ETF to long Bitcoin. I wouldn't long it, but I was looking at the potential short, but obviously they've run that way up, so it's very close to its high. So I'm not going to chase it up that high. Coal, we talked yesterday that they beaten coal down. Keep an eye on this area if they beat coal down, because that's one of the sectors they tend to rotate into. So there might be some future opportunities in there. Copper's run up. I looked for an ETF. This is the long on copper, COPX. I could not find a short ETF on copper. I really would have liked one. I think, several of these commodities have really run up. So here's the Dow. The short on the Dow is not, the risk reward is not great right now. Bunch of energy. So here's FANGU and FANGD. So the long on FANG, the short on FANG. You can see really neither one of them is attractive right now. So here's FAZ. You can see it's a little below a 2-to-1 risk reward profile, but the 52 weeks above 2, the current's very high. So it's got a pretty nice risk reward profile. Bottom to top's over 2, and that's close enough. Golds, again, all the commodities have run up. If you want to try, there's multiple ways you can long short the commodities. If you want to try a short, now none of the shorts are showing as having a risk reward profile that I would want to go after. So here's nail. Again, it's showing over 2, but it's a little high right now, so we'd like it to come down near that 19 support. Here's SQQQ and TQQQ. So again, it's showing attractive, but it's quite a bit above support. And so same thing with the short. SQQQ is quite a bit above its support. So not really chasing either of those right now. Again, natural gas, all of these oil, natural gas, energy, a lot of these commodities, if you're a day trader, a scalper, momentum trader, plenty of opportunities to make money. And that's one of our main messages, right, in our BeachBum trading community, is there's plenty of ways to make money in any market: bull market, bear market, range-bound market, choppy market, you name a market, and there's a way to make money. So, and we're just here to try to help you find them and succeed in executing them and make money trading, succeed in your trading career. So I flip the banner a little bit. Hopefully you like this information. And we'll smash the like button. We really want to get this information, these messages out to more of your fellow traders out there. Also bring back people that, got blown out in the bear market. Now's the time. We said this a couple weeks ago. Now's the time to get back in. We think the bear's in hibernation through the end of the year, and now's the time. You don't want to miss out on that opportunity. So bring them back, bring more people into the community. Again, this is a team effort, to grow the community, and everybody help each other out. So here's the S&Ps, here's SOXL and SOXS. So you can see how attractive SOXS is. Very nice. SOXL not so much. Silver, I looked at this short silver, but it's still not really. If it comes, if they run silver up higher and this gets closer to support, I'd be interested in shorting silver. We're long silver with this ETN, just sitting there collecting dividends. Solar, here's a couple ETFs on long solar, and we've talked about they've been rotating in and out of solar every day or so, every couple days. If you catch one of these when they're rotating in, there's opportunities using both TAN and raise. Here's BTI. You can see now it's quite a bit away from where I've got my buys. Not terribly attractive right now. Here's all the treasuries, TLT, TMF have run up recently. Here's the uraniums. US dollar, the dollar came down, but UDN, which is the down on the dollar, UUP is the up on the dollar, It's not terribly attractive. UBXY is the long on the VIX, and if the VIX gets down around 20, particularly prior to the next Fed meeting, I'll probably take a long in the VIX using UBXY. With the VIX at or below 20, again, going into the next Fed meeting. The VIX is down quite a bit. Let's see, right now it's at 22.52. So it's getting down there. I would expect it to continue to retrace, revert to the mean. Like I said, where we get to a bottom below 20 going into the next Fed, I'll probably take a long in the VIX on UVXY going into the next Fed meeting. Hopefully we'll get a little bit of a pop, make some money. I won't stay in it, but if I get stuck in it and have to wait for some kind of volatility event, that's okay. We played that many times before. Just sit on the VIX, just wait for something to cause a pop, make some money. So. And you saw we canceled we still have our trade or our buys in SPXY, but they're just sitting there. It's not really attractive right now. So we took it off the watch list, but so just very quickly, shopping list, stocks you want to buy on a dip, buy on an irrational reaction to earnings like we did with Disney. I mean, that's a good example of a shopping list stock is, we used to look at Disney at 120. And then, it took a dive over the past several months. And when it took the dip on earnings and also, most of the other negative sentiment stuff is already out there. So we thought it'd be a good time to go long for a long-term investment, long-term swing in Disney. That's a good example of a shopping list stock, irrational reaction on earnings, and that's the time to buy. They're a profitable company. They're not going to go out of business. But, beware of zombie stocks. You don't want unprofitable stocks that can't even service their debt. You can access these videos via these links. A couple weeks ago, that was the theme of in October. That was the theme of our game plan is beware of zombie stocks. And you can also access these bonus videos about more about zombie companies, zombie ETFs. We've been talking, for months about inflation proofing your portfolio. Also, with rising interest rates, again, interest rates are going to keep going up. It's just how fast and when, but they're going to keep going up. So make sure the stocks you're buying are not going to be negatively impacted by rising interest rates or a recession. Again, something we've been talking about for a long time. So make sure your shopping list is resilient to rising interest rates, the coming recession. And also, flexibility with the dollar. The dollar's been beaten down, but it'll probably bounce back up when they raise interest rates again. So, didn't have any news items. I don't have any further trade ideas offhand. So I can take some questions for a few minutes if there's a particular stock you want to look at. Now or if you'd like a more detailed due diligence, I can throw that in here. Also, you can always put it in the comments below this video in our free Discord. Again, we'd love to have you join us in our Discord. Again, please share this with your fellow traders. Get them in our Discord. Get them in the community. Invite them to these chats. I see you guys are having a great chat. We've got a great group of traders here helping each other out. So we would encourage, again, join our Discord, bring in more people, share this via your social media. Again, we want this to be a community effort to grow the channel, grow the Discord, because it benefits everyone, right? The more people we have helping each other out, the more benefit it is to you. So I'll put the link up to the Discord again. And if there aren't any questions, Redfin, yeah, there was some negative news on Redfin. I guess they're real estate, right? Homes. Yeah, we know the home market's in recession, particularly, mortgage industry is bad. We talked about layoffs in that industry. This in part one, also several weeks ago. So again, if you have further questions, put them in the comments below in our Discord. We also have a Facebook group if you like or prefer that forum. Also, all of our social media. You can always ping us at any of our social media sites. You can find all the links to our social media, the invite to the Discord, also links to our primary trading platforms, tools, resources, etc., additional references. Pretty much, it's a quick access to all the things that I use on a regular basis. You can find in the link section on our homepage, which is beachbumtrading.com, bum without the U. So again, links to all of our sites, all of our resources, tools, etc. So again, if you have any further questions, if you'd like due diligence on some other companies, other stocks, etc., let us know, and we will do our best to accommodate that. And otherwise, we hope that you have a great trading week for the week of November 14th through November 18th. And good luck. Have a great trading week. And we'll see you again, hopefully, during the week and then next week. So have a great one. Bye.